Welcome to the 401k Audit CPA Success Show, where we're 100% focused on helping companies across the United States prepare for their 401k audit. If you have 100 eligible participants in your 401k plan, then this podcast is for you.
Hello, and welcome to today's episode. Today, once again, joined by Kim Moore, here, Audit Director at Summit CPA, and we are going to talk about a new audit standard that isn't quite approved, but will be approved for the upcoming year. So we want to make sure we get this out there and people are aware of it. So, Kim, I'll let you give me the fancy name of the audit standard and then kind of go into some of the details. So what's the name of this standard coming out?
Welcome to everyone. And I know everybody's favorite topic is new audit standards coming out, but we're going to try to make this as interesting as we can as we talk about it today. The new audit standard is called SAS, which stands for Statement on Audit Standards number 136. They are numbered in order of their being approved or being proposed and then approved. This standard number 136, the official title of it is Forming an Opinion and Reporting on Financial Statements of Employer Benefit Plans Subject to ERISA. Big long name, which is pretty typical for an audit standard, kind of a legal type document. So no surprises there. The thing to kind of take away from the title and what's changing is the audit opinion letter. That is the very important part of every audit that gets done for benefit plans. So this affects any benefit plan that is subject to ERISA that obviously needs an audit. It will change the actual letter that your auditor issues back to you.
So they're just adding a couple words. That's all it is, and we could just end the podcast here. They're going to add a couple buzz.
I wish that was the case, and I think we all wish that was the case. Unfortunately, audit standards usually have bigger implications than that. It actually is going to change the entire letter. Some of it is more like you just mentioned. It is changing the order of items in the letter, and it is changing some verbiage. So definitely that's a part of it. We won't go into all those details today because we put everybody to sleep. But it does change a couple of very important things. One is it enumerates the items that the auditor is giving an opinion on. So it's going to spell out the work that was done as part of the audit. Now, in theory, all of that work should have been done in the past. And as we here at Summit have looked at this standard, and all of the detailed guidance isn't out yet, but as we've gone through what is available, we believe that we're already complying with all of the required items that are going to be enumerated in the upcoming reports. But not all audit firms will be. And so that is something that as a plan sponsor, you want to not necessarily dig into the audit standard because it's a pretty long document. And if you're not an auditor, it might not make a lot of sense and it would certainly be a lot of work for you. But I would suggest talk to your auditor and ask them, are they doing all of the things that are going to be coming up in the new standard already? If they're not, what are their plans to incorporate those items that they're not covering? What do you think that's going to mean in terms of the timing of the audit, the time it takes to complete the audit? What is it going to mean for me as the plan sponsor? Am I going to have to dig out a whole bunch of additional documents? I already have to give you a whole bunch of information. So what does that mean to me? So that's the first part of it. The second,
just to dig in on that a little bit. So I know we've talked about this before, but we do a lot of 401k audits. It's really the only type of audit we do. But some companies who do 401k audits, they only do one or two 401k audits. They do them of their other clients, or they'll do a handful of them. So this standard may change those companies that it might not be worth it anymore.
That's right. That's what we're anticipating may happen. As you mentioned, Jamie, if your auditor does a lot of audits, they're probably just like we are on top of this. They've been monitoring it. This isn't, that was just issued and nobody had a heads up. I mean, this has been coming for a while, and those of us that are in this business have known, and we've been watching it. But if your firm doesn't do many of these audits, and maybe they're very busy with year-end work or tax work, that's kind of where their focus is. They may not even know this is coming. They may not find out till late in the day. And for one thing, it may give them a lot of additional work that they don't really want to do. They don't want to take on. And they may, as you mentioned, just look at this and say, this is way more depth than I want to get into on an audit. I don't really even understand some of these things that I'm going to have to give an opinion on. So they may choose to get out of the 401k audit business altogether. So I guess from a plan sponsor perspective, get with your auditor ASAP and ask them, do they know about this? What are their plans? Have they already started looking at it? If they're either not informative about it, and they can't really talk, they don't want to talk about it, or they say, "Oh, I didn't know about that. Let me look at it." Then that's something I think you'll know as you talk to them whether they're looking at it, they're aware of it, and they're already working on it. Then maybe it's not so much of a concern. If you get the response that they don't know about it, or they haven't looked at it yet, or I'll worry about that later. I think those are all clues that as a plan sponsor, you need to make sure you stay on top of it. The last thing you want to happen is you get late in the year and you're getting closer to the due date, and then your auditor's looking at it, and then they decide, oh, now I see what you're talking about and I don't want to do it. Now you're scrambling as a plan sponsor to try to find an auditor, get the audit done in time. And while we mention that, let's talk about the timing. This goes into effect for periods that end on or after December 15th of 2020. For most plans that are out there that are benefit plans, they're calendar year plans, which means their financial reporting period runs from December or January 1st to December 31st of every year, which would mean that this would go in effect for your plan year that ends December 31st, 2020, which is, of course, our current year that we're in. That would be audited in the calendar year of 2021. So we're a little ways away from when this is going to be in effect for those plans. But as we've mentioned, you don't want to get behind the game and have to find out late that your auditor is unable or unwilling to do your audit. But you do have a little bit of time here to worry about it.
But with that said, I think it is, like you said, it is effective right now, right? So if your year end is 12/31/2020, you're in the 2020 year. So, can you just go into a little bit what those new tests or those tests that are being required are so I can make sure I'm not going to have findings on those this year? Because again, we are in that year right now.
Right. Very good point. The things that you're doing in the 2020 year are going to be covered in the audits that fall under this. Most of the areas that it talks about in the regulation are participant type transactions. So if you think about if you have a participant in your 401k plan, what kinds of activities could that participant go through during a plan year? So they could become eligible to participate in the plan for the first time. They may be choosing to contribute or may already be contributing to the plan. As the plan sponsor, you may make a contribution as a match or a profit share on behalf of a participant. Participant may take a distribution out of the plan, so they may withdraw money out of their account. They might take a loan against the funds in their account. They may be charged fees for the transactions that they occur during the year. All of those things are covered. Also, things that are regulatory requirements, both by the IRS and the Department of Labor, are covered. So things like what a party in interest is, and there's a whole set of individuals and entities that can be considered as parties in interest. We won't get into all those details, but those individuals or entities may or may not have transactions between the plan and themselves, and they may or may not be prohibited. So one of the things the auditor is going to have to do is look at all of those entities and individuals and make sure that if there were prohibited transactions, that they were properly dealt with. So that's kind of a complicated area, but something, again, if you're not sure, talk to your auditor about that, get a little bit more information.
But I think the key there is, to me, again, as someone who's done 401k audits a long time ago, like it's just keeping documents and keeping organized, right? Because again, these are things that you probably have anyways, but the easier you can access them and the better they're documented, the easier the audit's going to go. So I think that's the biggest thing, is just making sure you're ready to pull these things when they're requested, because you want to have that those documents pretty easy access to. So
that's true. The other thing I would mention is that make sure that you're paying attention to any communication regarding the 401k plan. Obviously, anything you get from the IRS or the Department of Labor, from a governmental agency regarding any type of benefit plan that you have, you always want to pay attention to those and make sure that you're doing anything that communication requires you to do. And if you're unsure, by all means, don't set it aside and say, don't worry about it later, or this probably doesn't really matter. It always matters. So if you don't understand, there's always a phone number to call to contact. Call and ask, because you don't want to get in trouble with a governmental agency about your plan. But the other thing is, most plans today work with service providers. So the assets are held by some outside party, and then you're using another party usually to handle the day-to-day transactions. Most plans today don't do all that work themselves. They outsource that to a third party. So again, those third parties are going to communicate with you on a regular basis. They should be communicating to you about this change if your plan requires an audit. So if you have not heard from them, you should be in the near future. They're all still trying to figure out exactly what does this mean to them, because it may mean some changes on their end, but they should be communicating to you. So again, as you get those communications, whether it's in regard to this or anything else, pay attention to those communications. Make sure if you don't understand something, you're not sure, does this apply to me or not, get with your third party assigned representative. If you don't have an assigned rep, call the 1-800 number, but make sure you keep on top of it, because again, you don't want to get behind in trying to do something. And then when it comes to all of this being audited, then you run into problems, because either you didn't do something you were supposed to do, or you didn't keep documentation of something you were supposed to, and then you're going to run into problems when it gets to this coming into play. Which, Jamie, that brings up another thing that is a requirement that isn't new, but it is spelled out very explicitly in the new standard, is that as I'm conducting this audit in what will be 2021 for most plans of the 2020 activity that occurred, if I, as the auditor, find things that either weren't completed, they weren't documented, so I have no evidence that they occurred, or there was an error, something was done incorrectly and completely not timely, things like that. So something went wrong along the way. I am required now as an auditor to give you documentation of that finding to the plan sponsor. There's something called an internal control memo or internal control letter. It's separate from the report. It's a separate document, but that will go to the plan sponsor at the end of the audit. I am required to put those items in that memo. I'm required to give that to you and make sure that you understand those findings. So the plan sponsors will be kind of on record now with these written documents that they were told that whatever it was that they didn't do correctly, or they just didn't do at all. So there's no more, oh, no one told me, I didn't know. That's not going to be a valid excuse anymore. And the people that put together this new standard worked very closely with especially the Department of Labor on the standard. So the Department of Labor is very aware of this new requirement going in. So they're going to be, as they're doing their audits or investigations or just general inquiries, if they know that your plan has undergone an audit, that's one of the first things they're going to ask is for those memos. And then they're going to be looking to make sure that you as a plan sponsor, you were told that this was an error or that you weren't doing something. So what did you do to fix it? And you want to be able to say, yeah, as soon as I found out, then I did, A, B, and C. You want to be able to answer that. You want to have documentation that you did it. So again, your auditor should already have been doing this. They should already have been giving you a memo. We here at Summit already do this. So if you have had an audit before, and you didn't get the letter, ask your auditor about it. If you're a new plan that's going to need an audit, what's another good question to ask as you're vetting out potential auditors? Do they do this already? What do those memos look like? When do you get them? How do they get delivered? Those kind of things. Those are all very good questions to be asking your auditor or potential auditor.
It's a great point. I think if you haven't received these letters in the past, obviously for this 2020 year, you were going to get those letters. And so it's important to get it and know what your findings were so you can have them fixed for this 2020 year, because you are going to get that official letter now. And there's no excuses. Like you said, most firms have been doing this and most firms do communicate it. But now that it's required, everybody's going to do it. Everybody knows that it's required. So you're going to be asked about it. So I think the biggest thing is know what those findings are, really focus on them, because those letters and those communications are going to be a lot more official now and a lot more top of mind.
Yeah. And the last thing you want is the Department of Labor to pull them and they see several years of the same finding that was never corrected. That would be not a good thing for you as a plan sponsor, and could result in pretty extensive fines and penalties if that were to occur. So definitely get on it right away. make sure that doesn't happen, because the last thing you want is a governmental agency coming after you.
So you talked about there's quite a bit of work that sounds like it's coming out of this. So, I mean, again, I know a lot of it's been already done, but now that it's required work, do you think fees will increase across the board, or how much?
Think,
And how much?
yeah, I think it's a potential. I think everybody's looking at this. I know there's been a lot of the calls I'm on with other firms that are talking about this. Everybody's kind of looking at it and saying, for those of us that were already doing a lot of the work, I think there probably will be an increase in fees, because there are going to be changes to just the letters themselves. The opinion letters all have to change. There's something called a management representation letter. Those have to change. Our engagement letters have to change. So a lot of the documents we're already doing, it's not that it's a whole new procedure that we have to do, but the procedure itself has to change. So I think there will be some increased fees associated with that. There may be a few additional types of work that we have to do that will cause some additional fees. But I think the big thing is for firms that weren't doing a lot of the work before, and they would be your low-cost firms, they're going to have to increase their fees substantially, because of this.
No, yeah, that makes a lot of sense. Again, I mean, nothing's done for free, and when you're in a service-based business, you have to evaluate exactly what's going on and what goes into the job. And like you said, this year alone, there's going to be a lot of changes to wording, but then I think overall, there's going to just be a lot of changes to the way we think about things and the way we approach the audit. So,
yeah, I think so too. And I think if you did research recently and you were trying to find a low-cost provider, and so you went with the lowest cost auditor out there, that may have worked for a year or two. But I think going forward, definitely their fees are going to have to increase substantially, because they're going to have to do the work that the rest of us have already been doing just to be in compliance. Or that audit firm is going to get themselves in trouble, and they're not going to want to do that. So you may find that low cost may go away, and you may be back up to the higher fee. So again, as we've said, good thing to talk about with your current auditor. Again, what are you planning to do? Have you looked at this? What are you thinking in terms of fees? Not necessarily that you can do anything about it as plan sponsor, but it does kind of give you a heads up as to, your budget that you need to do going forward. We always do budgets ahead of time, obviously. And maybe I need to increase that budget amount for the fee for the audit going forward. And again, that will give you a heads up to whether maybe they're not the right auditor, or maybe that auditor is going to drop doing these audits. So again, good thing to be checking into ahead of time to find that out.
So I'm going to take a quick second here to throw our email address out there. So I know we mention this in every podcast, but these topics, we want to make sure we're hitting on the right topics that our listeners care about. So if you have any topics, or if you want to be a guest, feel free to email us at audit@summitcpa.net. Again, that address is audit, AUDIT, at summit, SUMMIT, CPA.net. Net. So yeah, we're looking forward to hearing from listeners. Again, we're trying to make this podcast hit on the topics. We know this is a good one because it's front of mind, but we're always looking for new topics or questions. So feel free to email us. So Kim, any other areas that we need to hit on for this report, this new SAS?
Yeah, the other thing I wanted to mention is that there are requirements in this new standard for documentation, that certain specific documentation. A couple of examples are things like the plan document. There's a portion of every plan document that needs to be signed by both the plan sponsor representative, usually some high-level individual at your company, and then also your third-party provider that's going to be in charge of administering the plan for you. And usually what happens is they're electronic documents. They may, once you get everything all settled and everybody's good with all the verbiage in the document, it either gets sent electronically and there's an electronic actual signature on the signature page, or they still do send them hard copy and there's a physical signature and then it gets scanned and kept. Usually there's not multiple copies of those floating around, and when we as an auditor ask for a copy of those documents, which is a very important part of our audit, is getting obviously the plan document copy that oversees how the plan needs to be administered. We usually get the copy, it's the final version of the plan document, but it's not the signed copy. because usually that's in an archive somewhere. This is going to require us to actually get copies of that. Of the actual signed versions. I expect that's going to be problematic. That's going to take a lot of time and effort. The plan sponsor may not even have a copy of the signature. They may have signed it and sent it back to the provider. So I think one thing to do ahead of time is start locating all of those things that you had to sign when you first started the audit, or maybe you've done a change to the audit. Start working on getting those signed copies. It'll make the audit go a lot smoother once we get to the 2021 year when we're doing these audits.
That's a great tip. Yeah, I think that'll definitely be something that people should be thinking about now, because I could totally see those being, 5 years ago or however long ago. Who knows where they're kept? So
I mean, some of them were signed a long time ago. So
yeah,
and my experience is the third party providers don't have very good record keeping on those kinds of things, which is surprising to me, but we do see that. The other thing that is kind of a big change here, is that ERISA allows for what in the current time frame, but what will change as part of this, it was a limited scope option to do audits. So if your custodian, the entity that actually holds the assets, usually an investment company or a trust company or a bank, if they are audited by federal or state agencies on a regular basis, and they're willing to provide an asset certification letter, and there's specifics around that, and we've actually talked about that in another podcast. If they're willing to do all that, then you can have the audit conducted as a limited scope audit. It's less expensive and it takes less time, usually around the investment portions of the audit. That is maintained in this new standard because that's part of ERISA. The audit standards couldn't change ERISA. That's a congressional act. But they are changing the wording around the report. And so there's different verbiage, which is more of a concern for us auditors who have to write up those letters. But one of the things it does require is that the plan sponsor has to verify, independent of the auditor, that what was called limited scope, the verbiage of it's going to change, but that is appropriate for your audit, that it does meet certain requirements, that it is an entity that can provide the certification, that they are audited on a regular basis, so that the letter itself, that asset certification letter, has the appropriate verbiage in it. So I expect that there's going to be a lot of back and forth. Most plan sponsors today don't do that. They don't understand that. They just know it's cheaper when I go to pay my audit. So yes, I want that, but they don't really understand all the details of it. So again, more to come on that. I think if you're already having an audit, something to ask your auditor about. The auditor can help you with that because your auditor's already been doing that for you, and so they can kind of help you with it and walk you through it. They may have a form that they need you to fill out that you've never done before. I'm expecting it's something you're going to have to sign and indicate that yes, I did all this work. So anyways, more to come on that going forward, but just wanted to make everybody aware that there is going to be more work on the plan sponsor side. That's one example, probably the biggest thing that they'll have to do. But I expect there'll be a few more things that are going to get pushed back to the plan sponsor from the auditor to do once this new regulation rolls out. So again, good topic to have with your auditor about what kinds of things do you see me having to do as the plan sponsor that's going to add to my time.
I think that's the main takeaway from this podcast. If you are if you're someone who's undergoing a 401k audit, you want to sound educated and you want to sound like you know what you're talking about. Pop an email to your auditor, give them a call, and say, "Hey, tell me more about this SAS 136," and they'll be pretty impressed. Like, "Oh wow, my auditors, my clients on top of things." So
yeah, exactly. And I would anticipate, as the auditor, I'm anticipating those questions. I'm very prepared and happy to answer them. Also, I am trying, as we are beginning our audits for this year, to give our clients the information that this is coming. We belong to the Employee Benefit Plan Audit Quality Center, which is a part of the AICPA. It's a voluntary organization that gives us additional information specifically on benefit plan audits and auditing, and it gives us additional training materials, things like that. But there actually is a document that they've provided to us that we can share with our clients. It's a brief summary. I think it's about 2 pages long that talks about this upcoming change. Just gives you some real high level things to think about. So we'll be sharing that with our clients. Jamie threw out that email address. If any of you that are listening are not clients of ours, but you'd like a copy of that document, I'd be happy to share it with you. So I don't know, Jamie, if you want to throw
Yeah.
that
I'll throw that one more time.
email address out one more time.
That email address was audit@summitcpa.net. So yeah, if you want a copy of that, feel free to email us and we'll definitely get back to you with that pretty quickly. So
and we'd be happy to share.
Yep. So Kim, we're close on time here. Any final thoughts for our listeners?
I don't think so. It's more to come on this. I think just keep watching this space, and as we get more details, we'll do additional podcasts. We'll be doing blogs about it as well. So take a look at the Summit website, which is summitcpa.net. Just take a look out there, and we'll be having more information out there as it becomes available.
Yep. And just remember, tell me more about SAS 136. That's the key. So
exactly.
Awesome. Well, Kim, thanks again for your time and all the information.
Thank you.
I appreciate all the time you put into this.
Thank you.
Enjoyed this episode? Visit our website at summitcpa.net to get more tips and strategies for achieving 401k audit success. We're here to be a resource with ever-changing rules and regulations.